Let's start with the truth. Buying a condo in the Philippines used to feel like a surefire way to build wealth. Pre-selling deals, low monthly payments, and promises of high Airbnb returns were everywhere. The dream? Buy a sleek, modern unit, rent it out, and let passive income roll in. But for many first-time investors, especially those who bought at peak prices between 2018 and 2022, that dream has turned into a nightmare. Instead of steady income, they're left with empty units, mounting mortgage payments, and dwindling hope. In this video, we're diving deep into the condo oversupply crisis in Metro Manila and other key Philippine cities. We'll explore the root causes, real-world struggles of investors, and better alternatives that beginners should consider. Let's talk about it. Between 2015 and 2022, Metro Manila saw a condo construction frenzy. Developers like SMDC, Ayala Land, Megaworld, and DMCI went into overdrive. The skyline transformed. Projects were popping up in Makati, BGC, Pasig, Quezon City, even fringe areas like Las Piñas and Marikina. Here's what fueled the boom. OFW remittances at an all-time high, low interest rates, flexible payment terms from developers, hype around Airbnb and short-term rentals, overseas buyers speculating on future value. But no one asked the most important question: who will actually live in all these units? Let's be honest, developers and agents made it sound foolproof. This unit will pay for itself, and the rental demands are insane. Airbnb is the future. Many beginner investors put 10 to 20% down on pre-selling units, took out bank loans or in-house financing, expected ROI within 5 years. The numbers looked good on paper until the unit was turned over. That's when the problems began. Today, tens of thousands of condo units sit empty in Metro Manila alone. Here's why. Too much supply and not enough local demand. Pandemic wiped out tourism, killing Airbnb. Remote work reduced need to live near businesses, hubs. Rising interest rates made mortgages harder to maintain. Tenants now have more choices, driving prices down. Investors are now struggling to find renters, slashing rental prices, losing money monthly due to vacancies, or defaulting on loans or selling at a loss. This isn't passive income, it's financial bleeding. So, before COVID, Airbnb seemed like the golden goose. One unit could allegedly earn double or triple what long-term leasing would offer. But here's the truth. Airbnb income is highly seasonal, high management costs, and maintenance. Guests damage property more than regular tenants. Condos with strict security often ban short-term stays. Post-pandemic travel recovery is uneven. Unless you own multiple units or run it like a business, Airbnb is not a stable source of income for the average investor. Many first-time buyers underestimate monthly association dues that can be 2,000 to 4,000 pesos per month or more. Property taxes, special assessments for building maintenance, repairs, appliances, and furnishing costs. Let's not forget the opportunity cost, that down payment and monthly mortgage. It could have been invested elsewhere for better yield and liquidity. So, who's really making money? It's not the first-time buyer. It's the developers who sold you at full price, the real estate agents who took commissions, the banks charging you interest. Meanwhile, the investor is stuck trying to break even, often emotionally drained and with no easy exit strategy. So what are the better alternatives to condo investing? What beginner investors can do instead? First one is REITs or REITs, Real Estate Investment Trusts. This is an exposure to real estate without direct ownership, higher liquidity, and consistent dividends. Second is index funds or mutual funds, historical returns of 6 to 10% annually, diversified and passive. Third is Pag-ibig or MP2 savings program, tax-free government-backed, 6 to 7% annual returns historically. You can also start a small business. Side hustles like online selling or service businesses can outperform rental income with less capital. Affordable house and lot outside metro. This has less competition and growing demand, more control and appreciation potential. So the lessons for future investors: don't invest based on hype or peer pressure. Always run the numbers, expenses versus real income. Diversify your portfolio. Understand your time horizon and risk appetite. Real estate is not always a guaranteed winner. So the Philippine condo market is saturated, and it's the first-time investors who are suffering the most. They were sold a dream, but reality bit back hard. This video isn't to scare you, it's to inform you, to help you avoid costly mistakes and maybe to open your eyes to smarter, safer alternatives. Real estate has its place, but timing, location, and market dynamics matter. In today's environment, blindly buying a condo and hoping for income is not just risky, it could be financial suicide. So if you're thinking of investing in real estate in the Philippines, take a step back, educate yourself, explore your options, and remember, sometimes the best investment is the one you don't make. Thank you for watching. If you found value in this video, give it a like, drop your thoughts in the comments, and share it with someone considering a condo investment. Let's help others make smarter money moves. And by the way, this is not financial advice. This is only used for entertainment purposes. See you in my next video. Ciao!